Canada's housing plan just moved from press conferences to the credit box. The most important housing line in the spring economic update is not the huge dollar figure. It's not the slogans. It's not the part that's going to get clipped and soundbited by politicians. It's the part where Ottawa says it wants private mortgage insurers to start covering 5 to 8 unit residential buildings. It sounds boring, but it's not. People in the space have been talking a lot about this for the last little while, because housing supply doesn't get built when some politician just tweets build more homes, right? It gets built when somebody is willing to lend money to build the property, when a lender says yes.
Very correct, Dan. Welcome back to the Canadian Real Estate Investor Podcast. My name is Nick Hill.
And I'm Daniel Foch.
And today we are going to be breaking down the spring economic update, but not in the, classic normal political theater way that you might see in the mainstream media.
We're going to be looking at what actually matters for investors, builders, buyers, renters, and homeowners. Mostly the financing rules. We'll cover a couple of other things, but the rental supply numbers, population growth shift, and whether this actually changes the math on missing middle housing especially.
So if you get any value from this episode, go ahead and leave us a 5-star review. Share it with someone who thinks housing policy is just zoning and vibes and not real numbers. And if you are looking to have your deal underwritten or have any questions about financing, please reach out.
Zoning and vibes made me feel like vibe zoning should be a thing, like vibe coding. But quick version, the federal government is trying to make, small multi-unit housing easier to finance, right? Which is good for people who listen to the show. The average mom and pop real estate investor, not just towers, that massive corporate entities can create, not just big purpose-built rental projects, not just buyer subsidies for first-timer, buyers, people buying brand new houses with new tax rebates, et cetera. The spring economic update basically says that the government intends to amend mortgage insurance rules so private mortgage insurers can offer multi-unit mortgage loan financing on 5 to 8 unit residential properties. It also says that the government intends to increase the flexibility for mortgage insurers to support borrowing on 3 and 4 unit housing, including triplexes and fourplexes, which is something that we've been saying for a long time. Imagine MLI existed on smaller formats.
Come on. I mean, man, I've gotten that question so many times. I have a 4 unit. Does it work? Well, no. Try to build one more. Look,
but it's, sorry to interrupt you, but I feel like this is like indication that they realize that like the policy is working, and we were right that you need the small players to be able to access it, right? Like if we could make it more possible for more small configurations where regular people can become contributors to the housing supply, it will produce results.
Are you daring to take credit, Dan? I mean, I know CMHC does listen to the show, and we've been talking about this for years, and when we've met them in person, we've said this as well. I mean, I can't take all the credit,
they're partners in our Multiplex event, so it's obviously a space that they're
national Multiplex event. Four events across the country.
Yeah, make sure you guys check that out. It's on the Realist website on the events tab.
In the show notes.
Vancouver was already done, resounding success. Thank you so much for everybody who showed up. Sold out room, over 250 people. Edmonton already looking amazing. Got stacked panel, killer partners. June 11th. Make sure you make it out there if you're in that market. Wouldn't even be opposed if you flew in. We had people fly in from Toronto for the Vancouver one. And then we've got Toronto as always. Toronto, we're going to try what are we trying to hit this year? 450 people?
Yeah. I mean, Toronto's already, it's really come together. It's awesome.
Yeah. It's been sold out 3 years in a row. So we're going to see if we can sell it out again at 450. And then Montreal for the first time in November. So anyway, the thing that you're mentioning, I mean, the gap between anything you wanted to add there?
Yeah. I mean, like what the whole reason we throw the events, and I do this on a day-to-day basis, Dan, looking at, these small multifamilies and, being on the mortgage side and funding a lot of single family stuff. Then there's this gap to the commercial side, right? So what they're really trying to do here, which is great, is bridge that gap between the single family financing that is, a lot more simpler and easy understood and a lot more accessible and then you jump and there's this missing middle financing, you jump to that apartment building financing. What's happening in the middle? Well, that's what they're trying to fix with this.
Yeah. So, they want to see triplexes, fourplexes, small apartments, gentle density, more homes in existing neighborhoods. But if those projects cannot get financed on terms that work, and, a lot of those sites that maybe, the NIMBYs might say, hey, you shouldn't have 6 units there. It's like, well, I can't really make the numbers work with 4. If we make that possible, it could actually become supply, right? But as it stands right now, it just becomes sort of like paperwork or like red tape that just dissipates and doesn't get done.
Yeah, exactly. I mean, like the core idea is like you need the financing, you need the legal density, and that's not the same thing as real supply.
Right. A legal fourplex is permission. It's not a home, right? And A home exists after somebody buys the land, gets the approval, arranges financing, survives construction costs, rents it or sells it, and does not get financially destroyed in the process, which, if you listen to the show, hopefully you figured that one out already.
Yeah, exactly. I mean, the exciting thing is the update also proposes accelerating more than $7 billion in low-cost loans under the Apartment Construction Loan Program, otherwise known as ACLP, which has historically been reserved for really big stuff. So the fact that they're going to see, $7 billion in low-cost loans there, that's another good thing.
Yeah, the stated goal as well is to speed up construction of up to 16,500 new rental homes. So the package is basically this: make small unit multi-housing easier to finance, support purpose-built rental with cheaper capital, and do this at the exact moment that Canada's demand backdrop is changing.
Yeah, changing because population growth has slowed right down.
And yeah, it's like massive. I mean, there's a couple of charts in the budget. I'll try and put them up on screen for those of you who watch us on YouTube. The government overview basically says population growth went from a peak of 3.2% in the second quarter of 2024 to negative 0.2% at the end of 2025, and it expects population growth to remain subdued over the next 2 years. So probably not getting that growth again until 2028.
Yeah, but at the same time, rental starts, so they're starting the construction of purpose-built rentals, 100 staying in 2025.
Which the government says is roughly 5 times the 2000 to 2019 average. This is a big deal. So that housing story is changing. For the last few years, Canada had demand growth running at emergency speed, rental supply lagging, vacancy getting crushed, and rents ripping higher. Now it's the opposite. Population pressure has cooled and rental construction has been elevated. The government says asking rents have declined almost 9% since peaking in late 2024, including declines of $210 on rents in Toronto and $320 in Vancouver.
All right, okay, so I mean, the real question here is who wins and who loses when this stuff comes into play?
So renters win if rental pressure keeps easing. Small builders could win if financing becomes easier. Lenders and insurers may get more product volume, but what about like buyers and landlords?
Yeah, I mean, look, buyers are going to get some relief if rates and prices keep easing. Existing landlords, Dan, you guys like you and I, and a lot of our wonderful listeners, it's tough, right? It's soft out there, right? And a lot of us are feeling pressure. I mean, I have been desperately trying to rent out a really nice unit, and it's been a lot harder than it has in the last, 8 years since we've owned the place. Developers with expensive land and high construction costs, they're likely still going to struggle because it's just hard to get things done on that side of things too. Municipalities that legalized density, but at the same time kept that cost structure kind of broken, may find out that zoning reform alone doesn't get a lot built, right? I mean, actions speak louder than words here. So the real question again is, what should people be watching next if you fit into one of those categories?
So usually the way that these things go is like they'll do a consultation with the lenders. So pay attention to those consultations, pay attention to the actual underwriting rules, what changes, what premiums happen if the products end up going to those other markets, basically your Genworth and Sagan and Canada Guarantee.
Yeah.
What is the loan to value? What's the debt service coverage on these new insurance products? Are they going to be meaningfully different from or more appetizing than a CMHC? How is appraisal treated? How is rental income treated by these new insurers, and which lenders participate, which insurers participate? It's more than just like government policy at this point. It becomes a capital markets and capital allocation story, which is pretty interesting.
Yeah, totally. And Dan, I mean, you mentioned underwriting and loan to value and debt service coverage and all that kind of stuff. Well, if you're looking at trying to figure this stuff out, don't bother. Just go to realist.ca where we figured it out for you. Free calculator, really easy to analyze a deal on there.
Yeah, I think, most of the inputs that we discuss here, we try and put into the underwriting on that site. So you should be able to underwrite a deal pretty easily. And, the concept itself, I mean, this episode is fundamentally about underwriting, right? The market is
Isn't it always about underwriting?
It should be, right? But a lot of people, so let's talk about like mortgage insurance is a hard thing to get people excited about, right?
What?
So it's like kind of this like boring change, right? But I think it could matter a lot. So let's just go through that a little bit.
Yeah. Okay. Well, let's start with, that line itself, right? Why this boring mortgage insurance change really matters. Well, the spring economic update said that the government intends to amend mortgage insurance rules to permit private mortgage insurers to offer multi-unit mortgage loan insurance on 5 to 8 unit residential properties. That's a mouthful, Dan, but let's talk about why this would possibly result in meaningful change.
So Canada sort of has like this like line in the sand or like a cliff in the financing market. And historically, this was actually like a bad thing. Historically, it pushed more investors to go to 1 to 4 units because before MLI Select came out, investors were buying a lot of these 1 to 4 units because they could get a cheaper residential loan. And as soon as you went up into multifamily, you were paying commercial rates and different loan products. 1 to 4 units is often treated like residential mortgage territory. 5 units up starts looking a lot more like commercial or multi-unit residential territory and starts to get into better products like MLI Select financing. So it changes often the lender, the underwriting, the capital treatment, the insurance options, the borrower experience, and sometimes the entire viability of the deal.
Yeah, I mean, they literally could not be more different, right? Like, for instance, you could be on the same street in the same neighborhood, in the same town. You could even have a similar looking building, but totally different financing, a totally different financing experience.
Yeah, exactly. I mean, in Toronto, it's like, everybody's doing like the 4+1s, right? So like you from the street, you could have a 4 and a 4+1, and you wouldn't be able to see the 4 or the +1, sorry. So like they would look like identical buildings, but one has a garden suite, so it can get 5, and it's qualifies for MLI Select. They would look similar to anybody else from a city building perspective, but in the credit system, they're completely different animals as soon as it crosses over, and that matters because the missing middle is literally in that entire zone. And the most meaningful ways that we can activate more capital and more people who actually want to create housing, at least right now, your retail capital seems to be showing up, is by shrinking it and making it, lowering the barrier to entry. Triplexes, fourplexes. It doesn't mean give them horrible underwriting ability, by the way. It just means make it that they can do smaller deals. Small apartment buildings, 6plexes, 8plexes. This is the housing that everyone claims to want in the market right now.
Totally, but it's also the same housing that seems to consistently across the board, across the country, get stuck between these policy changes and zoning and just these different policy categories.
And that is why the boring mortgage insurance line matters. If private insurers can compete in the 5 to 8 unit space, the government's stated goal is to promote competition and offer lenders more choice, right? So more lender choice would mean more paths to financing, which makes it a more competitive market. That means that more projects pencil. And the word could is doing a lot of work here because we don't know how this is going to work.
Yeah, and I mean, this is the problem with this, just like with the HST stuff, just like with a lot of the stuff the CMHC or any government body seems to put out, is that we're waiting on the details. I love the announcement. It gets everyone nice and fired up and gives us something to talk about and our, listeners at our meetup something to speculate on, but the details aren't final and we need to know what's going on here.
Yeah, exactly. The update says the government will initiate a 30-day consultation and announce further details after the consultation, as is tradition. I mean, I feel like we've done a lot of episodes on different consultations and policies that people get excited about and don't happen. I would say hold your horses might be a prudent way to describe what you should be doing here.
Yeah, I mean, look, I agree. I don't think this is the moment to be like, okay, I'm now starting to underwrite this deal based on, MLI Select, low loan, like high loan to value, high loan to cost, longer amortizations, right? Don't just immediately start. I mean, do it if you want, right? Have fun with it. But I wouldn't start to just be like, okay, all these deals just got viable, right? So don't underline based on that. This is the moment to, just like many of these, to understand the direction. Where do things seem to be going? What have all these policy announcements and changes kind of, led to? Well, it's obvious that Canada and the top levels of Canadian government are trying to move the credit box towards small multi-unit supply. We've been talking about this for years. We were definitely early to this, and I'm so happy that we're finally seeing, the masses kind of slowly catch on. That the credit box is really where housing policy either becomes, just talk, and then die, or it becomes very real and we start to see it in the physical world.
Yeah, I mean, we've said it a couple of times here. I mean, there was a period of time where this wasn't necessarily true, but, lenders really decide the market. And so like this is why we want to have a mortgage broker or a good lender on our power team, because they're the ones who really decide the outcome. If you can't get, that's your key financial partner, right? Even if you're putting equity in the deal, your lender's usually putting in more money than both you and your equity partner. They decide the market. They decide whether or not you can do the deal. Housing policy would die on a spreadsheet or a credit committee if we can't figure out the right way to do it. So you can legalize the fourplex, you can create the fourplex, you can render the fourplex in a glossy municipal presentation PDF. But if the lender says no, it doesn't matter. The deal's not getting done. You just have a nice brochure, maybe some plans, some architectural drawings, some excited investors who are ready to fund your project, but it doesn't happen if you don't get debt. So
yeah, and how many unfortunate times have we seen that, right? All this work, all this money, all this energy gets put in, and boom, yeah, you've got nothing but a brochure and some blueprints. So, okay, the second piece is the 3 or 4 unit housing, Dan. The update says that the government intends to amend mortgage insurance rules to increase flexibility for mortgage insurers to offer products to borrowers that are building new 3 and 4 unit housing. It specifically says, and it uses the words triplexes and fourplexes, 3 and 4 units. So that really seems to be that kind of sweet spot, right? You're not the duplex, or you're not the house with a basement suite, but you're not that 5 unit, right? That's that sweet 3 and 4.
Yeah, and that is probably the part that is more relevant to a lot of small investors and local builders, because when people talk about multiplexes and missing middle, they often imagine a local property owner, a small builder, maybe an investor who owns a lot of land that they could, it has small houses on it that they want to convert, rebuild into a triplex or fourplex. Those are extremely that type of buyer, type of owner, investor. I mean, we have tons of people who have like big portfolios that they would love to convert, but those people are typically extremely expensive to financing, right? Sensitive, to financing. They do not have infinite balance sheets. They're not huge corporations. They don't have pension fund capitals. They cannot absorb unlimited carrying costs.
Yeah, and in the building environment where construction costs have gone up, labor is tougher, rates are still higher than they were, not so long ago. And approvals, well, that process is not exactly frictionless either, right? I mean, it all takes time and money and effort.
Yeah, and the policy theory is simple. If you can make financing more flexible, maybe more of those small projects become viable. But again, we have to be honest here. Financing flexibility does not magically solve bad deal economics, and the deal economics do typically get more difficult the fewer units that you're putting on the same piece of land. If the land is too expensive relative to the units you can put on it, and if development charges are too high and construction costs are too high, if rents do not support the finished value, and if appraisal comes in weak, then it might not change anything. And I think, you're in cities outside of like the denser cities, Toronto and Vancouver, some of these cities aren't upzoning as much. Maybe they don't need 6 plexes. They only need 3 or 4, but then nobody's building them because there's no financing. So, insurance rules might not save the deal if you don't have the zoning or the economics in place.
Yeah, totally. And I think just from a NIMBYism perspective, getting 3 or 4 units in a building on a, quiet street that's about to be absolutely ruined by a new development, I think there'd be a lot more public acceptance of 3 or 4 units than maybe like 6 or 8 units kind of thing, or even the 4+1 kind of thing, right? So, it might not, it can definitely reduce the friction. It might not completely fix the math, but, I think it's a big step in the right direction.
Yeah, I mean, I think, policy can reduce the friction. It can't repeal math, right? It's not going to change the underwriting of bad deals. And the math, I mean, it could change some underwriting if like you're extending the and all of these different things, but the math is really the whole story right now in a lot of these deals.
For sure. And math is always one of the main stories in real estate. Speaking of math, let's talk about CMHC. The good people over there do a lot of math for us in the country. The government's overview says CMHC's multi-unit loan insurance, otherwise known as MLI Select, that program has supported nearly 90% of rental apartment starts in 2024, right? That number jumped out at me a little bit. Dan, 90%. I mean, is there any real surprise there? CMHC MLI is going to be involved in almost all the stuff, whether you're trying to hit those absolute maximums or whether you're just using it at a, 80, 85%.
Yeah. I mean, then it should probably kind of stand out. Like nearly 90% is pretty enormous. It tells you that rental construction in Canada is already heavily tied to federal mortgage insurance infrastructure. So taxpayers are pretty exposed to this. It's not wrong. And to be honest, like we've been not afraid to mention that, there's certain types of deals that are happening in this space right now that create a lot of more risk than I personally would be comfortable with. It wouldn't surprise me if they were trying to make the space more competitive and maybe de-risk their portfolio to not be exclusively the taxpayer who's mortgage backing the construction of rental supply, like from a insurance underwriting perspective, because we had one of their underwriters at our multiplex event in Vancouver. Yeah, it makes sense. From you don't want to be overexposed to the trade. So when people talk a lot about purpose-built rental supply, they sometimes imagine a sort of like pure free market construction boom, but a lot of the financing structure has already been deeply connected to CMHC and federal support.
Yeah, totally. And